So we see a lot of interest from investors across Asia looking at the GCC as an area where it's no longer just about energy, for example. It's about the domestic consumer market, for example, rapidly growing. Asian companies want to come here, work with local entrepreneurs, exploit the market. But even at the margin, looking at manufacturing, for example, there's been a lot of shifts in supply chains. Supply chains are moving closer to consumers, and that also means for companies in Asia to explore how to set up manufacturing operations here in the region. So you have, of course, two-way investment and trade. You have from Asia, of course, goods being shipped here, like consumer goods, investment goods, for example. But you also have into the other way, not just energy, but increasingly even manufactured goods moving the other way. For example, services are moving as well, like aircraft maintenance services, for example, tourism services, etc. So there's a lot of connectivity, both when it comes to goods, when it comes to commodities, as well as services. And that's driving this bilateral trade. It's obviously with economies like China, for example, but even within the Indian Ocean Basin, India, for example, key partner for the UAE, but even across Southeast Asia, Indonesia, Malaysia, also increasingly trade partners who are looking at the GCC for more opportunities. So you see, traditionally, of course, China has been very engaged here in this region. I think there's been historically close connections between India and the Middle East. I think the new countries to look for are really the countries in Southeast Asia. Indonesia and Malaysia already have an affinity with the GCC countries. Thailand is there as well, even Vietnam. Those are all economies growing very rapidly, and they have traditionally looked at the US as a partner, Europe as a partner, but they're starting to diversify and increasingly look at the GCC as well. Mm-hmm.
We're pretty optimistic on the cyclical story. Obviously, it varies from one part of the region to another, but we do see strong consumption growth across most of that MENAT space, driven by demographics, continued inflow of new migrants into the region as well, and how strong sentiment is across much of the Middle East as well. The investment cycle is still turning, and there's this ongoing lift from external demand, particularly for services, especially for travel and tourism. That capital spending cycle really stands out on a global basis. There are very few parts of the world that have access to the funding or the confidence, frankly, to delivering the kind of capital spending cycle that the Middle East is currently pushing through. I do think that over the long term, this reshapes the Middle East economies. In the near term, it's a big driver of growth. It's also one of those economic dynamics that's drawing attention in from outside the region as well, especially from parts of Asia, particularly from China. I think there is a difference here. There's something unique about the Middle East economic cycle. It's partly about the immediate drivers, how broad those drivers are in terms of investment, consumption, and external services demand. It's partly, I think, about the balance sheet strength that backs the region up, that gives it room for manoeuvre at what's really a very challenging global time. But critically for me, it's these structural changes, shifts in the economic landscape, changes in how governments work, how labour markets work, housing markets work, changes in the business environment as well. I think it's already starting to lift the potential growth rates for much of the region. I think still have a way to run.